of a massive financial unraveling. We got to add a little addendum to the show map today, so we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government Hey guys, what's going on? Jebb here, and welcome back to Coffee and Crypto. This is your morning show where we go live 10 a.m. Eastern every single weekday, bringing you the latest Bitcoin and cryptocurrency, technical, on-chain, and fundamental analysis. Today, we're going to be asking the question, is the Bitcoin crash over? As you guys know, Bitcoin dropped down to $25,500 just over the last several weeks. On May the 12th, we dropped down there. As of this morning, we have rallied all the way up to $31,450. Is the bottom over? Are we about to go through this bull trap? Or are we instead going to continue on our descent that we started on November 10th of last year down to an absolute low of $22,500? Is the bear market over? Or do we have more to look forward to if you are looking to scoop up some more gains, some more entries down below these levels? That's what we're going to be talking about today. We're also going to be discussing how smart money has been flowing big time into the cryptocurrency space. Massive amounts of money has come into the cryptocurrency space on the institutional side and on the whale side. We have just seen about 20 or 30 new wallets get added that have over 10,000 Bitcoin worth $310 million right now. So we've seen a bunch of new accumulation going on. Does that mean that the smart money's buying down here? We're going to talk about all of that and more in today's stream. I am joined, as always, by TA Tim. How you doing, Tim?
What's up, everybody? Not always. I wasn't able to be here on Friday. None of us were here on Friday.
That's right.
But it was a long weekend for me. Mm-hmm. Good weekend, but I drank all of my coffee before the show, so I have no coffee today during the show.
I drank all my nap before the show. I know it's very saddening.
But I'll survive. I was literally right as we were going live. I was like, ooh, I probably drank that coffee too quickly. Got a little acid reflux going on in the old chest.
Yeah.
Well,
just acid reflux.
Maybe we can have some Bitcoin reflux and have the Bitcoin come up. No, okay, that was a pretty bad joke. But we're also joined as always by Smanold. How you doing, Smay?
Hello, everybody. I'm not doing good.
Oh,
I'm gonna be honest with you. The Celtics got blown out.
Oh no,
they did.
Water.
But they won game
But
one. So.
here's the thing.
Man.
I'm not concerned about it. The series is tied up. I still think this is Banner 18 year. And the Celtics have proven one thing, that they win after every loss. They never win twice or lose twice in a row, and never win twice in a row. To be honest,
I mean, they have to win twice in a row.
Yeah.
Statistically speaking, to win.
If they only ever win once in a row and lose once in a row, then that doesn't mean they have a 50%
I hope that they
win
do
rate.
it.
Yeah.
So, anyways, thank you guys. Back to you, Jebb.
Well, guys, we have a lot to talk about today. Real quick, before we jump into it, though, we are going to go ahead and bring you a word from our sponsor, Unstoppable Domains. If you guys don't know, Unstoppable Domains are extremely important in the cryptocurrency space because they're basically the same thing that happened in the late 90s when all of the .com domains come out. They're decentralized, and once minted on the blockchain, nobody can take those domains from you. Think of your domain as your keys to the world of Web3 and crypto. You can use your domains to send and receive crypto. It's safer, more convenient, and less error-prone than copying and pasting your long wallet address. It's human readable versus having to copy and paste that address, and makes crypto practical in a more physical world situation. You can host a decentralized website or an NFT art gallery on it for free through the Unstoppable Domains website builder. You can already even use your domain to verify your humanity and log into some decentralized applications, just like SSO, except you control your own data and identity, and that feature will be expanding. There's no annual renewal fees for your domains like there is with .com domains. You own it forever, and nobody can take it from you because it's secured on a blockchain. They have no renewal fees, and they also have free minting. To get your own domain, check out the link in the description box down below. Don't miss out on getting your identity locked in and secured in Web3. As I said, it's not like a domain like clubdefi.com or cryptojebb.com, where it has to be renewed every single year. You have to pay for it every single year. And where you have the issue of if you forget to pay for it, somebody else could come and take it from you. That's not the case with this. It's also not centralized in the same way .com domains are. Make sure you get your domain, whether it be tom.exit or whatever your name is, .crypto. Make sure to get those domains. Link in the description box down below. Extremely helpful in Web3. Much easier than trying to remember and keep track of a bunch of different wallet addresses. But guys, we're going to go ahead and jump into our market polls. Give me 1 second, Smay.
After I read the green names.
After you read the green names.
Yep.
Okay, well, read the green names.
I'm going to read the green names real quick.
Do it.
Here we have Grand Roofing Incorporated, Cyberfix Online, SEO, Houston, Texas.
Woo!
Sultan of Salt, Silent, with an 8. Interesting. Tristan Williams, Matt Z, Brad Geidel,
up, Brad?
Groovy. Oh my gosh, all of you guys. I love all of you guys. This is great. I love getting to read green names. Green is my favorite color now, so I love it. Back to you, Jebb.
Did you say Elliot Locke?
Elliot Locke.
Shout out to Elliot Locke. Shout out to everybody who is in chat. Shout out to TZ moderating the chat. Thank you very much to TZ. Guys, thank you to our moderators. Give a warm thank you to TZ, Ted, in chat, making sure that everything remains nice and friendly and calm and happy and excited. Make sure that you guys drop a thank you to him. And also, make sure to hit that like button. Go ahead and tickle it. Make sure to hit that like button an odd number of times. And if you don't like the stream, make sure to hit the dislike button an even number of times, and then we'll be good. We're going to go ahead and jump into our market pulse right now. As you can see, Bitcoin trading at $31,500, up 6.2% over the last 24 hours. Jumping onto the chart, you can see that we have had a relatively strong rally since about 8 o'clock last night Eastern, up 5.66% in 14 hours from just below $30,000 up to 31.5. Is the Bitcoin crash over? That is the title of today's stream. A lot of people are zoomed in here on the hourly chart looking at this rally and thinking, well, boy, howdy, look, the market's done crashing. I'm going to go ahead and put my life savings into it because the bull market started again.
If that's
again?
What are they saying?
I said,
they're saying what?
I said a lot of people think the bull market started to put their life savings into it.
I wanted the duty howdy again.
Duty howdy, they're putting they're putting their life savings into it because they think the bull market started. If that's you, I feel like a used car sale. I feel like a mattress.
I feel like a lot of Bitcoin holders are from the old South.
That's right.
Duty howdy!
Duty howdy! Come in today. Everything's got to go. Make sure to get your mattress today. It's a queen size set. No. Anywho, if you're one of those duty howdy old folks who thinks that Bitcoin's about to go into a big parabolic run, then I've got a stream for you, and it's called Coffee and Crypto. Let's jump back over here to CoinMarketCap. Ethereum is what they say in the South. Ethereum up to 1909. I remember 1909. That's where the accent comes from. It's up 7.15% in the last 24 hours. Binance at 307. Cardano sitting at 62 cents, up 11%. Really liking what I'm seeing on Cardano. It's doing pretty well over the last week with the Vasil hard fork coming up on the 29th. We're going to talk about that being one of the drivers of bullish action in the market relatively soon. Solana up 12.5%. If you guys have seen my Twitter, I sure have a bone to pick with Solana and its co-founders. Take a look at this tweet right here from Charles Hoskinson. I retweeted it. You want to know why I came out so hard against Solana? The co-founder of Solana did a very good job of explaining it to you, so make sure to go check out my tweet. Basically said, hey, Charles Hoskinson, because you're not building Cardano with, you know, bubble gum and duct tape, you're building a crappy project and you need to come back. And Charles Hoskinson responded, I'd love to see those guys build a hospital. Ooh. Maybe go to the hospital and get some medicine for that burn, guys. That's what I would say to that. The point is, Solana is sitting up. Where's my chart? Solana is sitting up 12.5% over the last 24 hours. I don't like Solana. Cardano is doing pretty well. Polkadot up 4.15%. Avalanche up 10%. Everything's doing pretty well today. If we look at the market capitalization, we are currently holding the level around $1.25 trillion. That is a wonderful thing. I like to see it. I want to see Bitcoin and Cardano and cryptocurrencies, Ethereum, continue to go into a rally. We have had a very sharp decline in total market cap excluding Bitcoin. It was sitting at 1.6 trillion, currently sitting at 600 billion. 2/3 of market capitalization excluding Bitcoin has been lost. And I want to really emphasize this trend right here that we're seeing on the Bitcoin dominance chart. Bitcoin is gobbling up a lot of dominance. This time last month, we were sitting around 41.75 on Bitcoin dominance. At the moment, we're sitting near 46. So we're seeing a big shift in the way that the dominance in the cryptocurrency market is spread out. And that actually makes a lot of sense because at the moment, Bitcoin is the hedge against the drop that we're seeing. Yes, Bitcoin is dropping, but not as much as the altcoins. And also, people have more confidence that Bitcoin is going to make it through this bear market. You're seeing a lot of people get out of things like Cardano, Solana, Dogecoin, Binance. They're pulling out of those cryptocurrencies. Not so much Binance, because Binance is growing on the hype of the exchange doing well and new listings all over the world, new regulatory approvals all over the world, excuse me. However, things like Ethereum, things like Cardano, things like Solana, they are universally getting wrecked right now, and people are putting their money and their cash back into Bitcoin, which actually makes a lot of sense. But here's the thing. It's not just people that are in the retail, whatever retail is left here, i.e. the people that are watching this stream is an example. There's probably maybe somewhere between 1 and 10 million people that are still left. Well over 2/3 of the small money players that were in the crypto space, I would say, have probably left by now. The people that are still here in small money areas, I'd say less than 50 Bitcoin, if they are still in the cryptocurrency space, a lot of them are consolidating back into Bitcoin. Tim's a good example. He was holding 10 or 12 different altcoins, and you're consolidated all the way down into the big three, aren't you?
Yeah, I am. Yep.
Exactly. And a lot of people are doing that. So you're seeing the altcoins get eviscerated right now, whereas Bitcoin is able to hold its market. But as I said, it's not just the retail that is flowing into Bitcoin. It's also the smart money. I'm going to give you a preview of the charts we're going to look at here in our discussion, and then we're going to jump into our TA to build up to it. And then here at the halfway through the hour, then we will be jumping into our discussion on why the smart money is getting into crypto and what we can do to make sure that we are a part of that smart money. But just a quick preview of these charts. Bitcoin number of addresses holding over 10,000 coins, up from about 82 to 101 right now. As of, I believe this was yesterday. That means that a lot of big money players are accumulating Bitcoin from where? Well, quite frankly, probably from the small money players that got out of the space because they got scared of the drop. So I want to make sure that you're on the right side of that. That's coming up. We're also going to talk about the Bitcoin illiquid supply. That's a pretty big deal. We'll be discussing all of that in a second. But first, let's start with some technical analysis here. As you guys know, we have a theory on this stream pretty consistently about where we think the market is going to go. We try and paint a picture about where we think the next 3 months are going to head, and the current perspective on what Bitcoin is doing is that we are in a falling wedge, as you can see with resistance there and support there, that we're probably going to rally back up to the resistance. The level at the time was 37,000, still roughly 37,000, but that level's coming down as time goes on. And then from there, we're going to follow through on the third primary wave of a 1, 2, 3, 4, 5 Elliott wave bear market. As you can see, it would look like this. And then that would drop us down to $22,000. Why $22,000? Well, if we bring up our moving averages, then we can see that the 200 moving average, which is the level that the market has come down to so many times in past. In fact, every bear market we've come down to this level. You can see here, here, and here. That moving average, which we would likely come down to, is currently sitting at $22,200. So the point I want to make in the technical analysis portion of this stream is that there's two ways that we can play out the bull trap, and there's two ways that we can play out the drop down to the absolute low of this bear market. One is through price. Two is through time. Let's explain. Well, if we look at the daily chart so we get a little more resolution, if we need to go all the way to this downtrending level of resistance, which I would say is where the market needs to go to, it's not need to, it could drop all the way down to it could skip wave 4 and just start with wave 5, drop all the way down to 22K overnight. That's possible. But we personally believe that we're going to go through this second corrective wave. This would be corrective wave 1, C1. This would be corrective wave 2, C2, as you can see right there. We personally believe that's going to happen. That is going to take us to this downtrending level of resistance more than likely. As I said, there's two ways we can do that. Either one, we can do it through price, i.e. we can shoot straight up, or we can actually, another way, we can do it through time. If we were to trade sideways at $32,000 here until September, then we would also see Bitcoin get to this flat level of resistance, this downtrending level of resistance. So there's actually two ways that we can play out here. There's actually three. Either one, we can straight up rally up to the level right now. That's unlikely. We can trade perfectly sideways for the next 3-4 months and get to it, and then that would get us to that level. Or what's actually going to happen is a mixture of the both. We're going to move in 2 dimensions, not just one, and we're going to work our way up here more than likely. If we do go to this downtrend, which we think is most likely, we're going to work our way up here somehow, and it may take a long time, and it may be a really slow movement to the upside, and we touch it at 33. We could go up there in the next week, and then we touch it at 37.5. The point is, some way, shape, or form, we are more than likely going to lead all the way up to this downtrending level of resistance. After we touch it, whether we touch it here, 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 or here, or anything in between, then we're probably going to have a final drop down to $22,200. Now, the problem with that is, well, not the problem, but the point to make there is that if we do continue trading sideways and we have the 200 weekly moving average, well, the 200 weekly moving average is continuing to move up to catch us. If we continue trading here around $30,000, $31,000, $32,000, then this moving average is going to continue to move to the upside. And instead of touching it at 22,000, because it's a moving target, we could end up touching it at 25. The bottom could theoretically be in if we don't touch the bottom until January or February of next year. The point is that there's different ways that we can move in these markets. We can move like this. We can move like this. We can move like this. The point is, our two anchor points that we believe this market is going to achieve is a touch on this downtrend and a touch on this moving average. So, Tim, how do you think that bounce of that bull trap and then the subsequent movement to the downside to the 200 weekly moving average is going to work. And if you disagree with the setup I have here about the rally to and then the drop down, then tell me.
No, I mean, I think you and I have talked about that, and we've talked about it on the show.
I believe so.
Again, I have to watch everything in lag. We got to get a system back. We had one that, if you guys are wondering all those times that our volume was jacked up, it's because our system, which allowed me to watch what Jebb does live and him watch what I do live, also had effect on the sound. So that's when those volume things were going all over the place. We're gonna fix that one. But I was trying to behind watch what you were doing / saying, and I've talked about this several times. I think that we're heading back up, just like Jebb said, to that level to hit resistance again, but I also don't think it's going to happen in a hurry. If you guys were to go over, if you're on my chart already, Smay, or if you're not, you can go to it. Over here a couple months ago, we did the exact same thing where we came down and touched support. We then kind of rallied. We had, rally here, then we dipped and rally. And through all of this, the emotions of the trader and investor were just all over the place. We came down this far, and this is when people started chirping about 20,000. And then we started to rally, and we're like, oh, never mind, we were wrong. We're going to go back up to the upside. And then, of course, we started falling again, and people were like, oh, look, you fell for it. You FOMO'd in, and now you. And then we rallied again, and we ended up rallying all the way up to 48,000, thinking maybe there's a chance we're going to be heading back towards the 50s and the 60s and hit new all-time highs. And, of course, then it seemed like the bottom just fell out from beneath us. We now crashed down. We're in the mid 20,000s, and we're starting it all over again. I think the same thing's going to happen here over the next couple of months. I do expect us to somehow, one way or another, work our way over to this resistance level somewhere around 37,000. Maybe a little higher, maybe hit as high as 38. There's a chance a wick even goes through. Maybe a wick touches 40,000, but then we close back on the daily and weekly charts around 38, 37. One way or another, we're going to work our way over here, but there's going to be a lot of playing that goes on between there. So I don't think it's going to be as simple as just saying we're going to move like this. I think it's a lot more complicated. I expect moves like this, and then back down, and then like this, and then back down, and then a big explosive day or two where we hit this, and there's a lot of hope, and then we crash down, and we start to delay, and it's like, oh, well, we just rejected, we're going to break through, and then we crash even farther, and then we start to work our way back down towards at least 25,000, if not then 22,000 as well. Hit that 200 weekly moving average. But I cannot guarantee you or tell you exactly what the price is going to do to get here. And I can't guarantee you the price is going to get here or get down here. That is just a lot of how the market is moving right now. It would make a lot of sense within this larger time frame falling wedge. But what I've been looking at, Jebb, is a little more small time frame stuff. There's a couple things here that people should be looking at because, of course, it's really nice. I put it on Twitter this morning. It's always nice to wake up to a nice Bitcoin rally or crypto rally while you're sleeping. You never know what happens when you're sleeping. So it's good to wake up to those things. But there's a couple things that people need to keep their eyes on, especially on the hourly chart. We did have a green 9 flash or a bearish 9 flash. What that means is usually we're a little overextended. Now, this doesn't always mean it's the end of the world. If you guys go back over here, we hit a 9 several times on our climb up here. We hit one right there. We hit one right here. That one was more of an indication we got towards the top. What maybe concerns me a little bit, and we saw it right here, and concerns a strong word. We saw right here where this 9 hit and volume started to come into play. We're also right there at that resistance level. There was some question marks. Was this going to be the top? Sure enough, as you guys know, we broke through. We came back up here, and then again we saw a spike in volume. History sometimes repeats itself. Doesn't always repeat itself. During this little climb right here, we have seen an uptick in volume, meaning there's a lot of trading going back and forth. It's not a whole heck of a lot, so I do think that we can make another stretch to the upside. The question is, where is that stretch to the upside before we, again, like I told you guys here a second ago, we start to play the upside, then we come back down, and then we go back up, and you're going to see people on Twitter, you're going to see YouTube analysts go back and forth between, are we going to hit 37 first, are we going to hit 22 first, and there's always going to be this play back and forth. That's exactly what the whales, the institutions, want you to do so they can get all the supply from you one way or another. But I would say those of you who are in the trading game, those of you who are in the investing game, that you want to get in and get out, you want to take some, take profits on some tops, go buy bottoms. I'm not saying it's time to take profit right here, but it's definitely time to keep your eye on the market because, again, we did see a chance over here where this all happened. It looked very similar, and we still went up to the upside another couple $1,000s. Absolutely, that could happen again here, but there is no guarantee. That's one of the fake outs that the market likes to do. A lot of the whales institutions, they love to show you how something works, and so they convince you, oh, it's going to happen again, and then, of course, they go the opposite direction. So I'm not predicting that we're going to have a little dip again the rest of the day. I actually think there's a lot of evidence and strength that we could go to the upside. However, there are some things I told you that are saying that potentially we're reaching a tipping point. On the hourly chart, the Lux Algo take profit, it's still above us. We got room to the upside, but it is sitting right there, lower than 32,000, around 31.8. Even more so if I go out to the 4-hourly chart, the take profit, we actually have already crossed the line with that wick. It's sitting right there at 31.6. Jebb and I were talking about this morning. This take profit on Luxago and stop loss have been amazing indicators to help traders know when to get in, when to get out. And right now, again, I'm not saying it's impossible for it to keep going up. Again, I just deleted it. Sorry, guys. There's room that we could probably even climb all the way up to 33,000, and that would be phenomenal. But you should know that we're starting to see some signs of a shorter time frame top that might need a small retracement before that climb continues. And as we talked about before, that's just part of the game. You're going to see the market continuously go up and down and be volatile to shake all of the more inexperienced traders out so that the more experienced traders can gather all that supply and then prepare themselves for that dip back down to the lower 20s.
Yeah, absolutely right, Tim. I think you guys should definitely be looking for a shorter-term correction, as he said. But I just want to wrap out our TA segment here with a little bit of a prep for what we're going to be talking about in our discussion. Again, smart money is flowing into Bitcoin. I don't think it's flowing into Bitcoin as big time as much as it will be in 3-4 months when we're trading at 25 or 24 or 23, but we are seeing money flow into Bitcoin, and I want you to be able to know the answer to the question of why. But before we do that, let me show you some of the reasons why I think $37,000 is also going to be the resistance. This is something I noticed I remembered while Tim was talking. Take a look here at the 200 daily simple moving average. This is the exact level that we topped out here on the 27th of March. If you think that we're going into a bull market, I encourage you to heavily consider the moving averages right now. The moving averages that we've found support on, as we can see on the 100 right here, and resistance on, that you can see on the 200 right here, and resistance on the 100 right here, support on the 100. These moving averages are no doubt critical to Bitcoin and the way that it is finding support and resistance. Both of those moving averages are going to be, if you extrapolate them, sitting between $35,000 and $38,000. It would be very difficult for Bitcoin to get through both of those moving averages right now until they move down, because just getting Bitcoin the strength to get up to $37,000 right now is going to be hard. Breaking through very powerful moving averages like that is going to be even harder. If you want historical precedence as to what I'm talking about, look no farther than 2018. We rejected off of one of these moving averages on almost every single top, either the 100 or the 200 or the zone in between them. We rejected off of that during the bear market. It took these moving averages dropping all the way down to 4,700 and 3,800 respectively before Bitcoin was able to get back up above them. So if you think we're going into a bull market in the next 2, 3, 4 months, I really think you should consider those. Now, as far as why is smart money buying right now, because I do believe that smart money is buying right now. I do think it's going to ramp up more. I don't think we've seen as much smart money buying right now as we're going to. But the reason that you're seeing it right now is because we are very low compared to the all-time high. If you want to call $69,000 a corrective all-time high or just a movement to the upside, and 65 is actually the real all-time high, which is a weird theory in crypto. 69 is literally the all-time high, but some people want to say that the top of the bull market was April 15th, 2021, which I can kind of understand that. Bitcoin is down 51.26%. As far as it dropping down to 22, that is unconfirmed as of yet. But you know what is confirmed? The absolute low of this bottom being at 26,000. The candle body's trading at 30 to 31, and we're at 31 right now. So we're at an absolute low, more or less, if you look out at the long-term time frame on the chart. People and smart money are buying right now because of fundamental reasons. They see a 50% fire sale going on Bitcoin right now. And let's just zoom out and open our periphery for a little bit. It's not just about the chart. What's going on in the real world? Well, we see interest rates being shot up. We'll probably see 3 or 4% federal funds rate by the end of the year. We see that the Bank of England, the European Central Bank, the ECB, is coming out on the 9th, which I do believe is Thursday, and they're going to be talking about raising interest rates for the first time in 11 years. If you go back and look at the European interest rates, they're like equivalent of their federal funds rate over there. It was last raised in 2011, and it hit 0 in the mid-2010s. Their interest rates are nil. That means that money is a lot cheaper in Europe. That means that any major multinational corporation in the United States who wants to take out debt, they're just going to go to Europe because it's cheaper than it is to do in the United States right now. The problem is, if Europe does start to raise, the European Union does raise those interest rates, then that's going to shock the economy because all of a sudden it's a lot harder for capital to flee from the United States into these other nations to find cheap debt. That's going to send shockwaves around the world if they start raising interest rates as well. And frankly, they need to start raising interest rates because otherwise the euro is going to get inflated into oblivion. Same thing with the pound. We need to see interest rates rise, but the problem is it's going to cause everything to be more expensive. $5 a gallon gas is not going to go away anytime soon, and all of these different forces are going to cause prices to go up. They're going to cause...
Oh, is it back? I think we're back.
Hello? We're back?
I think we're back.
Check.
Should be reconnecting now.
I think we're back.
There we go.
I can see myself.
Wow.
Hi. What I was saying, and we're going to jump right back into this. Sorry about that. That wasn't our internet. That seems to be an issue with YouTube. What I was saying is that money is getting more expensive around the world. People are going to have much less money to invest in cryptocurrency, and you're going to see Bitcoin and crypto stagnate a little bit. Eventually, you're going to see people come back into the cryptocurrency space as they adjust to this more expensive living, and you're going to see the institutions probably kick off the next bull market. The issue is that you're going to see it be very difficult for Bitcoin to get above $35,000, $36,000, $37,000 right now because the money simply isn't there. But the institutions realize what the writing on the wall is. This is my final point before we jump into our super chats. My final point is this. The average American, the average European Union citizen probably does not realize that in 2 or 3 years, Bitcoin is going to be the only answer to these issues with our currencies. Most of the institutions that have dozens of analysts, hundreds of analysts working for them, and many billions of dollars to invest, they realize that. They understand that the problem is that the money printer started running. Yes, it would have been very much harder when the pandemic hit if the money printer hadn't have run. But now guess what? We're paying for it anyway. You have to pay for an economy shutting down. You can't shut down the entire economy and not pay for that somehow. And when you print the currency, then you destroy the currency. That has happened so many times throughout human history. The institutions realize that if they want to maintain investor and shareholder value, then they have to put their money in a stable, appreciating, non-inflationary dollar and euro hedge, such as the US dollar. That's what Michael Saylor realized. And by the way, he knows most of the people in the Fortune 500. Or if he doesn't, a friend of his friend does. They're learning from him. They're realizing, wait a second, this guy he just bet the farm. They'll go bankrupt if he's wrong on this. He just bet the farm on this. You think Wall Street isn't watching very closely what Saylor's doing? And when it goes to $100,000, they're not all going to say, okay, we want a part of that. And they're going to jump in because they realize he was right all along. That's what's going to happen. That's why you're seeing smart money get into crypto right now, because they're starting to learn. They're starting to realize what Michael Saylor was talking about a year ago at the conference that he ran with all those different Fortune 500 execs. He was right. He was the guy that prophesied that this thing was going to go to the moon in that realm, in the Fortune 500 Wall Street realm. He was right, and he is right, and the smart money is getting in. It's going to take longer for the retail to be able to afford it and realize it, but the smart money gets it, and that's why they're getting in right now. We're going to be talking about that after our break. But let's go ahead and read some super chats. I think we have at least one.
I think we have a couple, actually. Let's see here. Do you guys believe in Elliott wave theory from MV?
I believe in I think Bitcoin and crypto tends to follow 1, 2, 3, 4, 5 and ABC wave corrections. I'll be honest, I haven't studied proper Elliott wave theory as much as I would like to, but from what I have studied on, because I've studied it some, from what I have studied on, I would agree with it.
And the other thing about it, I've done a lot more research into Elliott wave theory, and I think it's very good. But just like anything else, if people rely on it for 100% perfection, it is not always 100% perfect.
It is definitely not.
There are always exceptions to the rule, but as a whole, it's pretty solid. Speaking of Elliott Locke says, you guys think this pump had anything to do with the Amazon stock split? Keep up the good work, guys. Much love.
I don't know if Amazon stock splitting had anything to do with that. I actually didn't realize Amazon stock was splitting. That's an important point there. Its splitting is great for people that are trying to buy Amazon. I don't know if that would have a huge impact on Bitcoin personally, though. Yeah, they split 20-1. That's right. They needed to do that. Amazon was trading at a ridiculous premium. Yeah, no, I wouldn't. I don't think that would have that would have much to do with it.
Brian Lopez 22 says, is it me or is there a pattern of a pump this week/weeks prior to the Fed meeting? Then after the meeting, there is a correction.
That is exactly what we're talking about. There probably is going to be some movement to the upside, or at least slightly bullish, moving into those meetings on the 9th and the 15th, respectively. ECB's meeting on the 9th. Federal Reserve is the Federal Open Market Committee is meeting on the 15th. The Fed minutes came out, and we're pretty confident they're going to be raising interest rates by half a point, half a percentage, 50 basis points. So we'll be reading that here in a second when that comes out.
Last two I see here. Dustin Prince said, why are investors buying SHIB, Doge, And yet, ICP has tons of hate, but is legit. I want to pull the trigger badly on ICP. Seems like it's squared away.
Haven't studied ICP too much, but Doge and Sheeb never underestimate the power of a community, even if their cryptocurrency doesn't have a whole lot of intrinsic value. Ooh, shots fired. People are going to be on me for that in the comments.
Tom Wilkes, last one I see here, said, welcome back, and let's all have a great week. Thank you so much, Tom Wilkes. Although Tom Wilkes is in the chat. What if I don't want
Tom Wilkes?
Tom Wilkes is in the chat trying to start a boy band that's called... What is it? Love Muffin. TA Love Muffins. I don't know.
He's trying to start a love.
If you could have a band, who would be your key members?
He was saying that I'm going to start a boy band.
T-Shroom on the drums.
That's true.
Who are your key members? At what positions?
T-Shroom.
I don't know the positions of a boy band.
May the singer.
I didn't know there were positions. I thought it was just boys get on a stage and sing songs.
Let's go for it.
Yeah. So there's positions.
Smay's the singer. Tim's the guitarist because he's really good at guitar.
So then why would it be called Tim's band if I was the lead singer?
Hey, sometimes bands, the guitarist is the one that everyone wants to
listen
to. So you're the guitarist?
At least you're not bass.
That's what Jebb just said. So.
Shots fired. Well, I have one more question here that's not a super chat, but I do just want to answer this. Joker's Performance says, what about Michael Saylor saying all other crypto is securities besides Bitcoin? I think not all of them are securities. A good portion of, I'm not saying I think they are securities, but a good portion of altcoins probably will eventually get regulated as securities. So he's kind of got a point there. You do need to be careful on most altcoins because a lot of them probably will end up being labeled securities. That's not to say that I think they should be. That's not to say that I would label them that way. If I were the one in charge of it, I would make an entirely new asset class for cryptocurrencies. But Saylor does raise a very interesting and important concern for anyone who is heavy on altcoins. That does not mean don't invest in altcoins, but that is a threat that you need to watch out for because at any moment, the SEC could come out and say, hey, you know that cryptocurrency that you're in is ranked number 47? That's a security now. So, and then the price drops 70%. So be careful with that. That's why I think it's important to maintain a large portion of your crypto in Bitcoin because we know for a fact it's not. That has been established. Ethereum, I believe, has been formally established as not a security also, which is good precedence because there are a lot of cryptos that are people argue could be securities that are like Ethereum. Anywho, let's go ahead and jump into our discussion here. Big idea, smart money is flowing into Bitcoin. What's the point here? The point is a lot of big power players are buying Bitcoin and cryptocurrency. That's what we're talking about, and we're going to talk about why that is so important for you, the people. Where was that reference from? Tell me in the comments. And also, make sure to smash that like button. Let's see if we can't get up to 500 likes here in the next couple of minutes. We really appreciate all of you bearing with us through some technical difficulties. Let's go ahead and jump on over to this article from Benzinga. Got an interesting title. I'm not going to read that, but he says there's now 101 wallets with at least $300 million worth of Bitcoin. Whales are apparently well into, gosh, the analogies in this article are rough. Blockchain data for the number of Bitcoin addresses holding at least 10,000 Bitcoin worth nearly $300 million just exceeded 100 and reached 101, a 16-month high. We got the tweet from Glassnode over here. Bitcoin number of addresses holding 10,000 plus coins has shot up in a parabolic manner. Even ever since we dropped all the way down to this level of 31,000, Glassnode's just being extra over here. It doesn't list it at 20,000, 30,000, 40,000, or 60,000. It says 2 times 10 to the 4, 3 times 10 to the 4th. I thought that was funny. You can see that the number of wallets with over 10,000 Bitcoin, again, worth about $310 million at time of recording, has jumped from about 92 to 101. So that means there's 9 more wallets that are holding over 10,000 coins. We're talking about exchanges, and probably billionaires. So we're talking about maybe the Winklevoss brothers, maybe Binance's wallets, Coinbase's wallets, Brian Armstrong, at one point, Do Kwon. That probably isn't the case anymore. Satoshi's wallet is one of those wallets. It's very rare to have a Bitcoin wallet with over 10,000 coins. And what this trend shows us is that money is flowing into the big wallets, but money is flowing out of where? Well, the money is likely, and we do have other data to back this up that we've shown in other streams, that a lot of the money is flowing out of the small money wallets. A lot of people are taking money and they're selling it, and they're putting it back in US dollars, even at a loss right now, because they're uncomfortable with Bitcoin. I have a very simple question to ask you. Do you want to follow the smart money, or do you want to follow the young money? Do you want to follow the smart money that knows how to make hundreds of millions of dollars over the course of years, or do you want to follow the impatient and not very, for lack of a better way of saying that, not very educated on crypto markets money? What money do you want to follow? I want to follow the smart money. Well, what's the smart money doing right now? The smart money just added 9 more wallets with over 10,000 coins. Those 9 wallets alone have 90,000 Bitcoin. That's like 3% of the Bitcoin in circuit, or 0.3%, whatever it is. That's a huge amount of Bitcoin. That's a huge amount of Bitcoin. And the point is, you have a choice to make. Do you want to follow the smart money, or do you want to follow the money that is leaving the space when there's a discount? You know, it's really funny to me that when the market is down, you see the Bitcoin wallets jumping up. What does that mean? And by the way, you also don't see that over here on this first drop. You saw Bitcoin drop from $60,000 to $5,000 down to $30,000. Number of big wallets didn't rise that much. Remember, right over here, see my mouse, right over here, in it was April or May. Actually, it might have been March. Sometime over there, I forgot the date, Michael Saylor got all of those executives, the people that would have the ability to put $300 million worth of Bitcoin into Bitcoin. He got all of them in a room and said, hey, look, Bitcoin's the future. I bet my bottom dollar on it. I'm putting all of my money into it. He told them that. You didn't see a bunch of whales getting into the crypto space on this dip. It took them time, and now they're learning. We are at a 16-month high. The reason that we were at such a low was because we saw a massive amount of retail flood into the space. You saw a bunch of people coming into crypto, taking money off exchanges, hodling it. You saw a bunch of retail. Now you're seeing the retail's evaporated because the retail mostly stuck through this drop to $30,000. It's this second drop where they're starting to leave. That's why we saw a rally up to 69, but right now we're barely able to get up to 32. You didn't see the whales jump in here because they didn't think the bottom was in. If you'll remember back then, I got a lot of flack for this. I said back in, what would that be, May, I think, of last year, that we would probably go down to $20,000 or $22,000, and then it bottomed out at 30. Everybody made fun of me for that, and I ate my own words, and I said, okay, well, I guess we're not going down there. Then we went to 69. Now it looks like that's actually going to happen. My hunch back then is what the institutional investors realized, and they just stuck with that. They didn't eat their words like I did. I thought, okay, well, I'm wrong. They stuck with it. And they were like, okay, no, I'm not buying at $30,000. I'm going to hold off. I'm going to see what happens with the Federal Reserve. I'm going to see what happens with the brewing conflict in Europe. I'm going to see what happens with gas prices in the oil market. I'm going to see what happens with our earnings reports. And now they're starting to get into crypto. My point, this rally up to $69,000 was driven by retail, which is great, and we want that. However, to start a bull market, we're going to see that happen from institutions. We're going to see institutions get into the cryptocurrency space in a big way because the institutions buy Bitcoin and they hodl it. Take a look at this chart over here. This is the Bitcoin amount of supply last active over 10 years ago. About 2.5 million Bitcoin. Huge portion of Bitcoin in existence has not moved in 10 years. This number going up directly leads to the price going up. Directly leads to the price going up. Why? Because price is a result of supply and demand. And if you take the supply out of the ecosystem, the price invariably goes up. What we're seeing happen is some of these institutions, Michael Saylor and MicroStrategy, great example. They've got 130,000 Bitcoin. They have enough Bitcoin to make up 13 of those wallets that we saw earlier of 101. When you see this much money being pulled out of supply, then that allows for the demand from the retail and from the institutions, but they're buying over the counter, but really the retail demand that'll happen on exchange where it affects price action for them to come in, and then that will rally the market. I want to see the institutions sucking up supply so that when the retail comes in with their on-exchange demand, then the price will moonshot. But the price is going to have a much higher foundation when more money is gobbled up by the institutions. A lot of people are like, Jebb, I don't want the money gobbled up by the institutions. I don't want the money gobbled up by the whales. I understand that. I'm not telling you what we want. I'm telling you what's going to happen. The institutions are more than likely going to continue accumulating. Whales are going to continue accumulating in long-term wallets. And you're going to see the supply shrink and the demand increase whenever the retail does eventually get in. That might take 6, 12, 18 months for that to come in full swing. But my point is that the supply side of things is getting stronger and stronger and stronger. The demand side of things is stagnant, and that's why the market's trading sideways, because you have to have both components. But the better we get the supply side of the equation, when the demand comes in, the more meteoric the rise is going to be. The lower the supply, when the demand comes in, the more powerful the demand will be. I hope that makes sense. If our supply is at X level compared to X level, the lower it is, the easier it's going to be and the faster it's going to be for us to rally. That's a very important point. You have to understand the supply and the demand side of this. Tim, do you have any thoughts on that as far as setting up the supply side of things for when the bull market comes back in? If we have so much money off exchange in long-term wallets from investors such as institutions that have a 10, 20, 30-year time horizon rather than a 3-minute time horizon, is that a good thing for the bull market?
Yeah, I mean, so when it comes to the supply aspect, that's the nature of the game, and the whales understand it. I've talked about that before, is that even in a bear market, one of the advantages of trading is not necessarily to build more US dollars, although a lot of times if you know what you're doing, you can increase your US dollar amount, but even more so it's to increase your supply. And that's exactly what whales and institutions are doing. And that's why what we just see, we see happening here. We just saw that, there's now 101 wallets with at least $300 million of Bitcoin. We see smart money coming back into the space. I don't think that anyone in that group is saying we're buying this because we believe this is the bottom. There's an ability for them to get the price to go up, for them to take profits, to guess what? Let the price come back down and gather more supply. Just simple math right there. If they can make the price get up there towards 40,000, let's just call it 38, and then dip it down to 20,000, they could almost just about double their supply of Bitcoin. And then, of course, then they can let it ride. And they know the principles of patience to allow for investments to actually become profitable. They're okay if their average entry point at this point, if they got in late and their average entry point at this point is 40,000, they understand the nature of the game is gather more supply, because 5 years from now, 10 years from now, 20 years from now, they will be very happy that they got even more supply at these discounted rates. So there's a game that's being played here, and I think that retail investors need to understand the game. I'm not saying you necessarily need to play it. That's a hard game to play if you're not able to sit next to your computer a lot of time. If you're not able to read the markets perfectly, which is very, very hard to do, and in fact, not really anyone can read them perfectly, but I'm darn close to perfectly. It might be good for you to kind of stay on the sideline and watch and understand that things are going to happen this way. But there's money to be made, and the whales and the institutions are kind of they're creating the path, and that's what we talk about all the time. A lot of people want to complain about the whales and the institutions and their greed. It's like, well, you can try to fight them and then lose that battle, or you can be like one of those fish that attaches themselves to whales, so they don't even have to do that much work. They just follow, where's the whale going? I'm just sucker fish. I'm just going to suck onto this whale, and I'm going to follow it wherever it goes. If it goes up, guess what? I'm going to follow the smart money. If they sell, I'm going to sell, and I'm going to let, because they know something I don't know. So, that's my thoughts right now on what is happening. I don't read any of this stuff, and say that the bull market is about to resume, the bear market is over. I'm definitely sitting in the camp of believing the bottom. Let's say the bottom is in, well, we are going to go retouch it at least. Like that 25.5 wick that we have back here a couple weeks ago, we're at least going to match it, if not go lower to that $22,000 level. I mean, who knows? Who knows how long we move sideways, and that 200 weekly moving average, it continues to climb up and up and up. I don't know if, I can't tell you with absolute certainty 22 or 20,000 is the bottom. I do think there's some strong evidence to say we're going to touch that moving average. The question is, how long are we going to move sideways before we come back down to touch it? Could it be 22,000? Could it be a little higher on 23, 24,000? Is it going to be around 25,000? That's the answers I don't know, but I got to continue to wait and see and follow the smart money as they move.
So, Tim, I want to ask, do you think this surge in whale buying is a signal that we have bottomed out? Do you think the bottom is in because the whales are buying right now?
Now, I mean, remember, whales also bought at dips that we had back in, I'm going to go back to my chart and look, even though you don't have to go with me on this one, Smay, but I'm gonna look for dates, because I remember significant levels where whales bought. We had whales buying back around 40,000, 42,000 back here in April. Guess what? That was a temporary bottom before we peaked out at around 43,000. What is my dates right? No, sorry, my dates were wrong there. My bad. We had whales buying around 43, and then we climbed up to 52. They sold. We had whales buying here around 35,000, 33,000. Guess what? We got to 48,000. They sold. Whales buying does not indicate bottoms of markets. What it indicates is a temporary, or what we like to call secondary trend going on. The main trend is we are moving to the downside, but we have some secondary and tertiary trends that move to the upside, and whales understand, hey, yeah, I'm gonna have to pay some fees. Yeah, I'm gonna have to do this. But if I buy $10 million worth of Bitcoin at 35,000 and sell that at 48,000, I'm going to make a lot of money, and I'm going to set myself in a great position to have a lot of cash, so that when we dip down to those $20,000 levels, I can buy in and double, triple, quadruple my holdings in not only Bitcoin, but also these other altcoins.
So how does this affect the bull trap storyline? I think what we're looking at here, guys, is that Bitcoin is going through the sideways accumulation right now, and in some way, we're likely going to rally all the way back up to that downtrending level of resistance. Yeah. As far as the whales buying, in my opinion, and I'd love to hear your thoughts on this in a second, Tim, I don't think it actually affects the storyline of the bull trap very much. And the reason is, and this is what I was talking about earlier about the whales impacting supply, but not necessarily so much demand. Most of the whales that are buying 1,000 Bitcoin at a time are not buying on Coinbase. First of all, Coinbase have the fees. Even if you have an exchange with 0.1% fee, you're still paying a ton of money if you're buying 1,000 coin. Most of the people that are buying these coins are buying them over the counter, which means that it's not going to have much of an impact on the price action at all. But it does impact the supply, which indirectly impacts the price. You see, as you take supply out, then it means that there's less Bitcoin to go around. It forces the price up. But the price changing as a response of buying and selling, it has to occur on exchanges, or normally, for the most part, occurs on exchanges. There are ways that it can occur over the counter, but it's not very powerful. As far as this bull trap, I don't think the whales buying this has much of an impact here. I think they're actually two different narratives. The bull trap narrative that we're looking at right now is something that's likely going to play out over the next couple of months.
Yeah.
The whales buying Bitcoin is something that's going to have an impact on the order of years and decades. Because many of these whales, as Tim said, they might be swing trading, but a lot of them are buying for the long term. They're buying so that they can have a larger portfolio that they can go and use as collateral to take out a $250 million loan to expand their business. You know, that's what we're looking at here with cryptocurrency. They're also looking for places to legally avoid taxes by having their money in crypto, using it as collateral, taking loans out against it. They don't have to realize capital gains and pay all kinds of taxes to their federal government. So there's a lot of different tax strategies going on here as well. Point is, the whales are buying up Bitcoin at an increasing rate, and that is setting us more and more up for the future. But it doesn't mean that the bull market has started now. It means that when the bull market does start, that it's going to be even more powerful because more Bitcoin is out of circulating supply. So if it's not the whales, then what's causing Bitcoin to jump up? What do you think might be causing this little rally that we're seeing here, Tim? Or is it just normal volatility?
I think this is the way the market's going. I think the whales and the institutions know that this is the pressure we have on the market right now. There's a lot of pressure, and I'm going to try to say this clearly so people understand. There's a lot of pressure coming from the bottom, not from the top. And what I mean by that is the bears have been working very hard now over the last couple of months to press us down. Just like we talked about last week, I gave an analogy of a tug of war. There are times that you actually release a little bit. If you guys watch that show, Squid Games, there was even the strategy. That was the strategy they used. They pull, and then they actually all together let go. They didn't let go. They just released their pressure. They allowed the other team to pull so hard that they gained a lot of ground, but they fell over. And now that they've lost their stability, now they went to pull. They ended up winning the tug of war. Same thing happens here. There's been so much pressure from the bears pushing the price down, and it got so far down. Now there's a lot of pressure on the support line that's going to push us back up. Whales know this. Institutions know this. People who have watched the markets and they understand the charts, the on-chain charts, the charts on technical analysis, they're like, hey, there's a lot of room right here for a great buy spot. And Jebb, you're absolutely right that not all whales end up selling at these points. What they understand is this is a good dip. But here's something we talk about all the time, and we need to remind people. When whales miss the boat, they bring the boat back. When institutions miss the boat, they bring the boat back. It's when retailers miss the boat that it's like, oh, who cares? Nobody cares about the retail investor. It's going to keep going up. One of the ways to know that there's a boat that's been missed is when you see price dips with massive volume. Go to my chart real quick, Smay. I've talked about this several times. This massive uptick in volume with these low prices, to me, this is telling me there was a massive amount of demand down here, and we have not yet exhausted it. That's why I think we're going to go lower. What you're going to look for, guys, to know that we are potentially starting a bull run and the bottom is in, is not when we have a bottom with a high amount of volume. It's when we'll have a bottom with a low amount of volume. What that means is all the demand is gone. Guess what institutions and whales look at? They're like, all right, keep bringing the boat back. There's more demand here. There's more people that want this. We can continue to gain more supply at these low levels. When they see the price come down low and then boom, there's no volume, that is the communication to them that says there's no more to go down. It's time to go back up. This is what we saw. I don't know if you're still on my chart. This is what we saw over here. I'm going to go to my 4-hourly chart to make it a little more clear. Come on now, work with me, chart. There we go. This dip that we had last summer of 2021. Look at that high volume with the dip. Look at this bottom right here. Look at the volume. This is what communicated to the whales. High volume here, high volume here. It wasn't ready yet. It was this dip. It was this dip down below 30,000 with almost no volume that communicated to whales and institutions. It's time to rally. I don't have time to go and show you the history, but go back on your charts. Go look at the volume and go look at bottoms and tops of markets. I guarantee you they all have an increase in volume peak, drops back down. If we're on the top, drops back down, and then we go back higher with no volume, that's the indicator. Look at it. Look at these tops right here with almost no volume. That's the indicator of the whales right there. It was time to sell and go in out of the market. Same thing. This happens with supports and resistance levels. And right now, all we have is a bottom with high amount of volume. Watch us get a bottom. And here's the thing. If we come back down to these levels and the volume peaks back up, the boat's still there. The whales are going to bring it back because there's still supply to pick up there. When we hit a bottom somewhere in this area over here with low volume, that will be the indication to me, hey, it's time to go ahead. If you have cash on the side that you've been waiting, it's time to move at least significant portion of it in, because more than likely the bottom is in.
Absolutely. Well, my answer to that question would also be this. I think the sell side pressure has been relieved. I think it's important that we realize that the market can move up as a result of two things. One, the bulls got stronger, or two, and this is the one people forget, the bears got weaker. Right now, I think the bears are letting up, and the sell side pressure is being relieved, so Bitcoin is rallying. However, the problem with that is that as soon as the bears come back, then we're going to drop down again. It's not so much that the bulls are stronger that we're rallying right now, it's that the sell side pressure is let up. We have a lot of the FUD that was going on in the market the last week or two. It is let up. The problem is a lot of that FUD is going to come right back here in the next couple of days on the 9th when ECB comes out and probably raises interest rates in the European Union for the first time in 11 years. The Federal Reserve is likely raising interest rates another 50 basis points on the 15th. When that happens, that is going to be very bearish for the market, and people are going to have sell-side pressure resume, and you're probably going to see Bitcoin drop down again. Over the next 2 weeks, you will probably see a back test down to $30,000. The point is here is that Bitcoin's bull trap is still more than likely going to happen, but it could happen via a price rally, or it could happen via price stagnation and moving to the side, sideways. But in some way, shape, or form, Bitcoin is going to consolidate at these levels before probably dropping down to $22,000. So, what's the application here? Whether Bitcoin goes up, down, or sideways, I don't want you to FOMO buy in. Remember, the bear market is not over, even though there could be a rally over the next several weeks, and then probably a subsequent drop, or a drop first and then a rally after that. It's kind of hard to tell exactly what the rally is going to be like, what the bull trap is going to be like. But no matter what happens, understand that the bear market is not over. A bull market is coming, but it's going to be in the future by quite a bit, probably 6 to 12 months from now. So understand that the bear market is still in swing, and we should be making sure that we are sticking with the trend because it's our friend until it has end. June could be a respite from the bear market as we see Bitcoin going through corrections leading up to and through the Federal Reserve's meeting and through the European Central Bank's meeting. But after that, we could see a rally up to the 4-point here, around $36,000. But from then, we will probably see a drop to the downside. Just remember, the whales do seem to be buying heavy at these levels, and that's going to set us up perfectly for a bull market over the next 6 to 12 months. Guys, we're about to jump into our final Super Chat segment, but I do have a very exciting announcement for everybody who has been waiting. As you guys know, 200 seats on Club DeFi filled up very quickly once we opened those not that long ago, but as of right now, there are an additional 50 seats open in Club DeFi, but you guys only have about another 20 hours and 36 minutes to fill those seats, and then registration will be closed. And if all 50 seats get filled before registration is over, which is probably going to happen, we saw 50 seats get filled in exactly 50 minutes the last time we opened this, then that will close at that point in time. There are 50 seats open for Club DeFi's closed beta right now, and whether those go first or we hit 20 minutes and 35 minutes from now, 20 hours and 35 minutes from now, whichever one comes first is going to be closed. So this is one of you cannot get into Club DeFi unless we open seats because it's a closed beta. Right now, there are 50 seats open. If you don't know what Club DeFi is, it is our educational platform that is taking the cryptocurrency industry by storm because we're teaching everybody how to actually trade, invest, do technical analysis in cryptocurrency. We have said for almost half a decade on this channel that the most important investment you'll ever make is an investment in yourself. That was the ethos behind CT2A. It is now the ethos behind its predecessor, not its predecessor, its child. It's the next generation of CT2A, Club DeFi. The best investment you'll ever make is one in yourself. You don't only get access to videos that are being updated and new videos are coming out every single month. You also get access to our exclusive Discord. You get access to office hours where you can jump into a live stream and our teachers will be able to answer your questions live. And we're also going to be having one-on-one paid coaching at some point in the future after full release. So make sure you get in now and lock in this current price because prices will be going up after launch. Check it out, link in the description box down below, or go to clubdefi.com. Let's go ahead and read any super chats we have, and then we're going to wrap it out.
Yeah, we have
Full screen.
one super chat. We have one from one of our members, and then I think we have some questions from chat that'll look like good questions. Grand Roofing Incorporated said, "Thanks for all of your teachings. I have now joined the One Bitcoin Club." Come on.
Woo! Let's go, man.
I don't believe it's up from here, but trading because Binance US has promo free Bitcoin trading. Hashtag CT2A alum. Hashtag Club DeFi. Hashtag FinSoft. Hashtag Bitcoin. Thanks, team.
Boom. Hashtag all of those things. Yeah, hashtag FinSov. If you guys don't know what FinSov is, that is our mission. We want to help you guys achieve financial sovereignty. We want you guys to actually be able to have control over not only your currency, not only your money, but also over the systems that manage that currency and that money. And that's what we teach you guys how to do here on this channel and in Club DeFi.
OMAC, who's been a Jebb Padawan now for 8 months, so thank you so much, OMAC, for your support, said Solana is a VC coin centrally designed to connect it to Wall Street in the near future.
I am not a fan of Solana at all. I was very, very vocal about that on Thursday last week. And if you'd like to see my unadulterated thoughts about it, make sure to go back and watch that stream. Full screen.
Let's see here. Dolphin Daddy said, "What do you guys think about the 800-day moving average approaching on the daily? Seems to affect price pretty good when we make contact with it."
Well, I think we have a second. I could take a look at it.
Yeah, I don't know. I don't often go in and type in random numbers into the moving averages. 800. If that's on the 800 daily, wouldn't that have some correlation to a lower number on the weekly?
It would, yes.
So
I see what he's talking about.
close.
We do drop, but there is correlation here. I find that what this is telling you, you will be able to read significantly easier, and you don't have to try and find the caveat if you look at the 200 weekly simple moving average, because it's showing you the bottom of the bear markets, but it would be much easier just to read the 200 weekly simple.
I'm sure there's a small amount of difference in it, but it's gonna be similar.
That's right.
So,
well, good deal.
That's what I got for Super Chats. I think that is it.
Here's your takeaway, guys. As you're sitting around the water cooler this week and you're talking about, what's going on in crypto? Here's what I want you to think about. Don't FOMO. The bear market's not over, guys. In fact, it just got confirmed not long ago. It started on November 10th, but it just got confirmed not that long ago. There's probably still several months left. Don't FOMO, but do accumulate. That's my opinion. That's not my advice to you because I'm not your financial advisor, but that's my opinion. Continue to accumulate, but do not FOMO. Understand that when the bull market does come into full swing, we will likely see a massive, extremely powerful bull market that will push the industry to $10 trillion, and we will start knocking on the door of gold's market capitalization probably before half the decade's over. But for the next 6 to 12 months, don't FOMO. The bear market's not over. I got to be real with you. There are going to be people that are going to come and say, look, Bitcoin's about to go into a giant Be careful of that. If you want to make money in crypto, bet on the trend. Now, there probably will be that bull trap, that little rally up to maybe 33, 34, 35, 36, 37, 38. We're probably going to have a drop down to 22.5. If we don't, great. But I would encourage you to accumulate, but don't think the bear market's over, because at the moment there are not signals showing that has happened and that we have bottomed out. So I just want you guys to be careful. If you enjoyed today's stream, make sure to hit that like button. Let's see if we can't get to 700 likes here in the next couple of minutes. Make sure to sign up for Club DeFi, because those seats are going to go fast. They went really fast last time, and they're going to go really fast this time. There were 200 then, and they all filled up. There's only 50 now. So make sure you get into Club DeFi. Go to clubdefi.com, or you can check the link in the description box down below. Again, you're going to be locking in that price and grandfathering that price. Even through launch, you will continue to pay what you're paying right now. So make sure to check it out. Link down below. Those seats will go very quickly. And also make sure to follow us on all of our social media, at CryptoJebb over on Instagram and Twitter, and at CryptoJebb Official over on TikTok. Tim, do you have any final thoughts before we wrap it out?
Yeah, no, I think the name of the game is, can you gain supply? And there's a lot of ways to do it. And you got to know your limitations and your skill sets and what you're comfortable with. Some of it is just continue to DCA. That's the simplest, easiest, most, hey, I don't got to think really hard about this. I just know my level of cash. I know my inflow. I know what I can afford to consistently buy into it. Those of you who have more time to pay attention to charts and do your research, you can trade. I think I've told you guys already, I have already doubled. I'm now more than double. I have doubled my holdings in Cardano through trading, simply because I know, and that makes my US dollar portfolio go up as well, but I don't care about the US dollar portfolio. Right now, what I care about is how many Cardanos can I come out with this to? If I want to transfer them over to Bitcoin, I can do that. If I want to keep them in Cardano because I believe in the future of Cardano, I can do that. Choose your coin. I mean, not just Cardano. If you want to do that with, let's say you're a Solana lover, do it with Solana. If you love Ethereum, do it with Ethereum. If you love it with DOT, do it with DOT. But right now is a season that you can accumulate more supply for a second, forget about the US dollars and think about supply. If you believe in that project and you think it'll still be here in 5 years, you're going to want to gobble as much of it as you can right now and then wait and see the profits, the gains you make 5 years from now. You will not be disappointed.
That's right. Well, guys, thank you so very much for watching. Before we go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.